Hello everyone, my name is Kartikeya. In this video, I am going to revise the 6th chapter, which is Input Tax Credit, which is very important chapter. So let us know the overview of the chapter. In this chapter, we are going to learn the eligibility and conditions for taking input tax credit and the how ITC is apportioned, and the next one is blocked credits, and the fourth one is ITC in case of special circumstances, and the fifth one is utilization of ITC, and the last one is restrictions imposed on the utilization of ITC. And our first topic is eligibilities and conditions for taking input tax credit. In that we see the first one, which is what are the eligibilities for taking ITC. There are two eligibilities given in our syllabus. The first one is the person who is entitled to taking ITC on inward supply of goods and services. He must be registered under the GST Act 2017. And the second eligibility is ITC will be available only on the goods and services which are used in the course of business. If the goods or services is not used in the business, input tax credit cannot be available in such goods or services. Next we move on to the conditions for taking input tax credit. There are four conditions which must be satisfied for taking ITC. The first one is possession of a valid tax paying document, which means the person having an invoice or debit note or any other bill prescribed as a valid tax paying document, but the supplier who is not furnished their invoice in the GSTR 1, the amount of ITC on non-furnished invoice is restricted to 5% of the eligible ITC on the invoice which are furnished in the GSTR 1. But if the amount of 5% is greater than the actual ITC of non-furnished invoice, then it is restricted to the actual amount. If you want more clarification on this point, please refer the illustration 1 and 2 for better understanding. And the second condition is the registered person must have received the goods or services. And next third condition is the supplier must pay the tax which is charged on the goods and services on which the ITC is taken by him, and the payment may be done either by cash or utilizing the input tax credit in the credit ledger. And the last condition is registered person must has filed his return under the GSTR 3B on monthly basis on his inward supplies. We have some topics given under the note. The first one is bill to ship model, which means it involves three persons, for example A, B, C, which means B purchased goods from A and A given a bill, and B supplies to C by delivering the bill which is received from A, and A delivered the goods to C. And the second point is in case of goods received in lots or installments, ITC can be availed only on the last lot or installment. And the third point is the registered person must pay the value of goods or services along with the tax to the supplier within 180 days from the date of issue of invoice. In case of his failure to do so, the amount should be added to the output tax liability along with the interest at the rate of 18% from availing ITC until he paid. But we have some of the exceptions to the payment of 180 days. They are when the tax is payable on under reverse charge, and in case of deemed supply of goods, and in case of additions made to the value of supplies. In all the above three situations, the payment within 180 days does not apply. And the next point is the person taking the depreciation on capital goods, he shall not be allowed to take the input tax credit simultaneously. The dual benefit cannot be claimed. And the last point is time limit for availing the ITC on invoice relating to the financial year is earlier of due date of filing the return for the September month of the next financial year, which is 20th October, and the date of filing annual return, which is 31st December of the next financial year. And the second topic is apportionment of ITC. The fundamental principle of ITC is when tax is not payable on output, credit cannot be availed. So when the goods or services used for the businesses, ITC can be available on such goods and services. If it is used for the non-business purposes, ITC cannot be availed. So ITC is credited only as attributable to the business purposes. And also goods or services used for making taxable supplies and for exempted supplies, ITC available only on the taxable supplies. Here taxable supplies includes zero rated supplies. But there are special provisions regarding the apportionment of ITC for banking companies and non-banking financial companies is they has two options. One is avail proportionate ITC and the another one is avail 50% of total eligible ITC and remaining 50% ITC will be lapsed. And also another condition is that once the option is selected, it cannot be withdrawn during the year. And also restriction of availing 50% ITC not applied to the tax paid on supply procured from the another registration within the same entity. And our third topic is blocked credits, which means ITC on such items is not allowed. There are 9 items on which ITC is not allowed. Let's see one by one. The first one is on motorcycles and other conveyance and other related services. If the motorcycle is used for the purpose of transportation of persons with seating capacity is less than 14, which means less than or equal to 13% including driver, ITC is blocked. But if the motor vehicles used for the making further taxable supply of motor vehicles or transportation of passengers or giving training on such motor vehicles, ITC is allowed. And also if motor vehicles having greater than 13% seating capacity for transportation, then also ITC is allowed. And also in case of vessels and aircrafts, which is same as motor vehicles, if it is used for the eligible purposes like making further taxable supply or transportation of passengers and training, ITC will be allowed. And also ITC on services like general insurance, servicing of vehicles and repairs and maintenance relating to the motor vehicles or aircrafts or vessels, ITC will be blocked unless such services are relating to the motor vehicles on which ITC is allowed and if such services received by the manufacturer or the supplier of such services. And if such vehicles, aircrafts or vessels given to lease, rent or hire, ITC will be blocked unless if it is used for making outward supply of the same category of goods or services or if it is provided by the employer to the employee under statutory obligation, or if ITC is allowed on such thing, then ITC will be on rent or lease also available. And if it is used by the taxpayer who is in the same line of business, then ITC is allowed, otherwise blocked. And the second category is ITC is blocked on the food, beverages, outdoor catering and beauty treatment and health services and cosmetic in plastic surgery and life health insurance. But if these are used for making outward taxable supply to the same category of goods or these services are provided by the employer to the employee under statutory obligation, then also ITC is not blocked. ITC is allowed. As usual, if these are used by the taxpayer who is in the same line of business, ITC is allowed. And also ITC on membership of a club or health or fitness centers and traveling benefits are blocked unless if it is provided by the employer to the employee under statutory obligation. And next third one is ITC is blocked on the construction activities like office, building, factory building, etc. And ITC is only blocked on the construction services when the expenses are capitalized. But we have 4 exceptions there are which ITC is not blocked. They are if the work contract services are taken for construction of eligible plant and machinery is allowed to the recipient and subcontracting when for further supply of work contract services. And next one is conflict. We discussed that the expenses are capitalized, then ITC is blocked. If they want to input tax credit, they won't be capitalized and also ITC is allowed. And the last one is work contract services not for the self construction. And next one is ITC is not allowed on goods or services received by a taxable person for construction of an immovable property on his own account, even though if it is used in the course or furtherance of business. And next blocked credit is inward supplies. There are 3 kinds of inward supplies on which ITC is not allowed. They are inward supplies charged to tax under composition levy. If a supplier registered under composition scheme, he cannot collect the tax from its customer, so he cannot avail input tax credit in respect of such supplies. And next inward supplies received by a non-resident taxable person and he has no fixed place of business in India, and tax paid by him on goods or services is not available to input tax credit. But non-resident taxable person supplies imported goods and tax paid by him on such imported goods is allowed as ITC. And lastly, for availing ITC on goods or services, it should be used in the course or furtherance of business, and blocks the ITC on goods or services used for personal consumption. And next eighth one is ITC is only available for payment of tax on output supply. If no tax is payable on output supply, ITC is not eligible. Hence the ITC on the gifts, free samples, lost or stolen goods or destroyed goods, ITC is not available as such goods cannot be used for making a taxable supply. And the last one is ITC is blocked on the detention of goods or conveyance in transit, etc. And we have special case where ITC is reversed when return of time expired medicines or drugs are treated as a fresh supply. It is the common trade practices of the pharmaceutical sector that they are sold to the wholesaler basis on the invoice, and after the date of expiry they are returned to the manufacturer through the supply chain. And next fourth topic is ITC in case of special circumstances. These are two types, which circumstances enabling input tax credit and circumstances leading to reversal of input tax credit. Now let us discuss the enabling of availing ITC. There are four types of eligible person to take input tax credit. There are persons who has applied for the registration within 30 days from the date on which he becomes liable to registration, and the person who obtains voluntary registration, and the third person is registered person who ceases to pay tax under composition levy and switches to regular scheme of payment of taxes, and the last person is also registered person whose exempted supplies become taxable supplies. So the first two category of the persons are entitled to take ITC on the inputs held in stock as semi-finished goods or finished goods on the day immediately preceding to the date which he becomes liable to pay tax. And the third and fourth category of the persons can take ITC on input held as stock of finished goods or semi-finished goods and also capital goods. This is the difference of the first two. Here capital goods are also included. And the third person can take ITC on the day immediately preceding to the date which he become liable to pay tax, and the fourth person can take on immediately preceding to the date on which supply becomes liable to pay tax. And here some points, they are availing of ITC in all the cases within 1 year from the date of issue of invoice by the supplier. And the second point is for the third and fourth category of the persons, the ITC claimed by them shall be verified with the corresponding supplier who furnished the details. And the last point is also for the third and fourth category of the persons who availing the ITC on capital goods will be reduced by 5% per quarter of the year or part of the year from the date of issue of invoice. And the second part is circumstances leading to the reversal of input tax credit. Here also there are four kinds of persons required to reversal of ITC. They are registered persons switching from regular scheme to composition scheme, and the registered person when his supplies get wholly exempt from tax, and a registered person who cancel his registration requires to reversal of ITC. And the last person is a registered person who is supply of capital goods or plant and machinery on which ITC has been taken. So the first three category persons, they are who switches to the regular scheme to composition scheme and supplies get wholly exempted from tax, and cancellation of registration are amount to be reversed which is equivalent to the input tax credit on inputs held in stock as contained in semi-finished goods or finished goods as stock, and capital goods on the day immediately preceding to the date on which registered person switches over, or date of exemption or date of cancellation of registration. And the last person is who supplies capital goods on which ITC has taken. He must pay an amount which is higher of ITC taken on such goods reduced by 5% per quarter of the year or part of the year from the date of issue of invoice for such goods. That is simply ITC pertaining to the remaining useful life of the capital goods and tax on transaction value. Simply it is higher of ITC pertaining to remaining useful life of capital goods or tax on transaction value. And the next circumstances where transfer of unutilized ITC on account of change in constitution of a registered person. Such change may be in the form of sale, merger, amalgamation, lease, transfer of business, and also demerger. Apart from the demerger, unutilized ITC on transfer to the new entity is there is only a specific provision for transfer of liabilities, and after completion of the given 2 points, the unutilized ITC is credited to his electronic credit ledger. The points are Details of change in constitution are to be furnished on common portal along with the request to transfer of ITC. And the second point is cost accountant or chartered accountant is to be submitted certifying that change in constitution has been done with specific provision for transfer of liabilities. And the last case in special circumstances is transfer of unutilized ITC on obtaining separate registrations for multiple places of business of within the state or union territory. Such a registered person can transfer the unutilized ITC to any or all of the newly registered places of business in the ratio of value of assets held by them at the time of registration. Here also assets means the entire value of assets irrespective of whether the ITC is taken or not. And the registered person shall furnish the prescribed details on the common portal within a period of 30 days from the obtaining such registration. Upon acceptance of such details by the newly registered persons, which is transferee on the common portal, the unutilized ITC is credited to the e-credit ledger. And let us move on to the fifth topic, utilization of ITC, which is the most important topic of this chapter. The amount of the ITC in the electronic credit ledger of the registered person shall be utilized in the prescribed manner. Before we discuss it, we know about that intrastate supplies is levied by the CGST and SGST and interstate supply is charged by the IGST. So let us discuss the utilization of ITC. It is a 4-step process. So the first step is amount available in IGST credit in the credit ledger should be utilized first towards payment of IGST. And the second step is remaining amount if any in the IGST credit can be utilized towards the payment of CGST and the SGST or UTGST in any order and in any proportion. That is, ITC of IGST can be utilized either fully towards CGST or SGST. And also entire ITC of IGST is to be fully utilized first before the ITC of CGST or SGST can be utilized. And the third step is amount available in CGST credit in the credit ledger shall be utilized towards payment of CGST and remaining balance if any can be utilized towards the payment of IGST. And the last step is amount available in SGST or UTGST credit in the credit ledger shall be utilized first towards the payment of SGST or UTGST. Remaining amount if any will be utilized for payment of IGST. And only when the credit of CGST is not available for payment of IGST. And also here the points are CGST credit cannot be utilized for the payment of SGST or UTGST. And also in SGST or UTGST credit cannot be utilized for the payment of CGST, which means cross utilization is not available. And the next topic is restriction on utilization of ITC, which is the rule 86A. The restriction is imposed on the three circumstances, which are if ITC is availed on the basis of tax invoice or valid documents issued by a non-existent supplier, which means there is no supplier of person is not conducting any business from the registered place of business, then ITC is not availed by that person. And the person without receipt of goods or services, he cannot claim the credit. And also he must pay the tax to the government with respect to such supply. And the second one is, which is already discussed, that registered person has been found that he is non-existent or not providing any business from the registered place of business. And the last one is for availing the ITC, registered person must have the possession of tax invoice or valid documents. In case he has not in the possession of valid tax documents or tax invoice, the ITC is restricted. And the next one is Rule 86B, which is the restriction on the utilization of amount in the e-credit ledger. This restriction is applicable only to the registered person having taxable supply other than exempted and zero rated supplies exceeding 50 lakhs in a month. Simply in any of the month, value of supply exceeds 50 lakhs other than exempted supplies or zero rated supplies, the restriction will apply, otherwise not applied. And the restriction is the registered person to discharge his output tax liability, the amount available in an electronic credit ledger shall be utilized only to the extent of 99% of the output tax liability, which means he cannot utilize more than 99% of the output tax liability. So he must pay minimum 1% of the output tax liability by using the e-cash ledger for discharging his output tax liability. And the last and final topic is exceptions to the Rule 86B, which means the restriction that minimum of 1% output tax liability paid through e-cash ledger shall not apply to the following persons. They are income tax payment more than 1 lakh by a registered person or proprietor or a karta or managing director of such registered person or any two other persons, whole-time directors, etc. And the registered person receives refund of more than 1 lakh rupees with respect to unutilized ITC on account of zero rated supplies without payment of tax and the inverted duty structure. And the next one is registered person has paid more than 1% of the total output tax liability through using the e-cash ledger, and the Rule 86B shall not be applicable to the government department or public sector undertakings or local authority or statutory body. And the last one is commissioner or any other proper officer may remove the said restriction after such verification and safeguard as he may think fit. So finally we completed the chapter, and thanks for watching, and don't forget to subscribe to my channel.